So you've had experience of working during a difficult time, particularly in the financial crisis of 2008. What do you think the banking sector is going to experience in the coming months?
This time is very different from 2008. At that time, we didn't have the human angle on what it would cost as we have a pandemic now. So what we are dealing with now for the banks, firstly, there's been a Moody's downgrade. What it means for the banks is that their own cost of financing is going to go up. Since they raise bonds in the capital markets, we will all experience the difficulty because that will be at higher cost than before. So that's the first impact on the banks. When it comes to how it will affect the clients of the banks, it's going to be very much different for each category of clients. So I would say for clients who have been good customers, paying on time, the relief measures that have been announced would be a welcome break for the next 3 months. Because what they basically do is they reduce the installments for this limited period. I must hasten to say that interest and fees on the loans will still accumulate. So if it is possible for small businesses and individuals to still pay their loans, I would say they must continue to do so, because this relaxation period is just a leniency that covers the 3 months. It doesn't cancel the debt.
Could you just talk to us about that response a little bit further on? COSATU has slammed the banking sector, saying that the measures that they've announced so far are inadequate for people who perhaps may need assistance, and a larger response is needed.
What we've seen in other countries is that the larger response that has been offered has been backed by government. As we speak today, what we have does not look the same with other markets, particularly in Europe and the US. We have our own offering, which is on the table, which covers all clients for the 3-month period. So what would help is for the clients who have credit insurance to first resort to that. Because what credit insurance does, it offers the clients in cases of death, disability, retrenchment, but also, which is more important for this time, where they work for a business that's going to be liquidated, or where they can't come to work, therefore lose income as a result of the lockdown or COVID-19, they will be able to lodge claims against the insurance that they hold. And depending on what is covered, they will be guaranteed the payment of the installments for a period as short as 6 months or as long as 12 months.
Do you think that the banking sector response perhaps will change as the picture of how COVID-19 is going to affect South African businesses and consumers becomes clearer?
I would say that remains to be seen. We have this emergency now, and we have reacted to that emergency by putting these measures. And we don't really have a clear picture of what's there after the 90 days. What we have to keep in mind is that the banks are regulated. So the responses that have been tabled by individual banks align very much with what has been given as regulatory relaxation by the Reserve Bank, by the Prudential Authority, also by the Financial Sector Conduct Authority.
Kunene, who's the MD of the Banking Association South Africa, joining us on the line there. Thanks so much for your time this afternoon.